Are you ready for the upcoming e-invoicing implementation in Malaysia? Let's dive into the specifics to ensure that you remain compliant with all the rules and regulations. Who needs to issue e-invoices? All entities offering goods or services must issue e-invoices for transaction reporting to the Inland Revenue Board, LHDN. Are there any exceptions to the requirement to issue e-invoices? Yes, certain individuals and entities, such as rulers, federal and state government agencies, statutory bodies, local authorities, and diplomatic missions, are exempt from this obligation. Consequently, customers paying for services rendered by these exempted individuals and entities must issue self-billed e-invoices to record those expenditures for tax purposes. Under what circumstances are businesses obligated to issue e-invoices? E-invoices are mandatory for all types of transactions, whether they are involved in business-to-business, B2B, business to consumers, B2C, or business to government, B2G, transactions. Are there exceptions to the requirement for e-invoicing? Certain transactions, such as employment income, pensions, scholarships, and dividends from listed companies, pose challenges for recipients when it comes to issuing e-invoices. As a result, these transactions are exempted from the e-invoicing mandate. How many types of e-invoices exist? Four documents are introduced under the e-invoicing initiative: invoice, credit note, debit note, and refund note, each with a distinct purpose. Invoice: suppliers issue it to itemize and record a transaction. It can also be self-billed to document expenses if the supplier is exempted from issuing e-invoices. Credit note: suppliers use it to rectify errors, change orders, apply discounts for early settlement, or adjust returns in a previous invoice without issuing a refund. Debit note: suppliers issue it to indicate additional charges on a previously issued invoice. Refund note: suppliers issue it to confirm the refund of the buyer's payment, indicating money returned to the buyer. What are consolidated e-invoices? Individual taxpayers can't offset taxable income with expenses like businesses can. Do suppliers have to issue e-invoices to buyers who don't need them? Suppliers can issue standard receipts instead, and compile them into a consolidated e-invoice monthly for transaction recording. Can customers request an individual e-invoice after declining earlier? Yes, they can, as long as it's within the same month. This allows suppliers to compile all transactions into a consolidated e-invoice by month's end. When are individual e-invoices mandatory? Certain activities legally mandate individual e-invoices for each transaction, irrespective of buyer preference. Transactions where consolidated e-invoices aren't allowed include automotive, aviation, luxury goods and jewelry, construction materials, payout to winners by licensed betting and gaming operators, payment to agents, dealers and distributors. When is it appropriate for a buyer to issue self-billed e-invoices? It's typically utilized as proof of expenditure when the supplier is exempt from e-invoicing, or operates outside of Malaysia's e-invoicing framework. If COT e-invoicing solution allows you to generate and submit e-invoices efficiently in real time, so you can focus on running and growing your business. To streamline your invoicing processes and ensure compliance, contact IFCA Software today at www.ifca.asia.